Welcome back to the second segment of the Tax Time Show. In today's episode, we are actually discussing about entrepreneurs and the tax considerations. Mr. Ajay Kumar is giving a lot more information regarding entrepreneurs and tax consideration in this episode. Quickly, you went over through all the entities, but do you want to specifically go to each and every single entity and give out a one-liner of each?
Sure, it will be my pleasure. So let's talk about what type of entity structure is best suited for what type of business. Say for example, S Corp is typically used for professional service business. In S Corp, you must have the payroll. In LLC, you don't need the payroll. LLC is typically well suited for situations where you don't have the payroll, you don't need the payroll. For example, real estate companies are typically the LLCs. If you have a business where you are making a lot of profit, you typically don't want to go with LLC. Otherwise, you will attract the self-employment taxes. C corporation, that's typically used for foreign investment, foreign ownership, because the C corporation pays taxes at the entity level. So if you have somebody from India owning a company in US, unless they are getting money, they don't have to file their US taxes if it's a C corporation. If you are just alone trying the business out, you can go with proprietorship. If you are more than one person trying to come together to start a business, it could be partnership. In partnership, you can choose to have it taxed as an LLC or S Corp. So each type of structure has their own pros and cons, has their own benefits and downside. You have to understand what type of structure is best suited in your situation.
Very good. Okay. Now let's go and look into the taxes thing, taxes liability for all these entities that are involved in it.
Absolutely. So it's not just the entity type that decides your tax filing, tax payment obligation. Also the type of business you are in decides what type of tax filing, tax payment obligations you have. Say for example, if you are a retail store, then more than likely you have a sales tax exposure with the state. If you have employees, you have the payroll tax exposure at the state level and at the federal level. If you are in a brokerage business or a freight business, you probably have some sort of a 2290 obligation. If you are in a auto shop business, you probably have the tire tax. So every type of business will have different filing, different tax payment obligations. So it's not just the type of entity you choose, it's also the type of business you are in. Will determine what type of tax filing obligations you have, what kind of tax payment obligations you have.
Interesting. All right. So sales tax and payroll tax are the most popular ones, but there are more taxes attached to it also. Maybe someday in our show, maybe we'll have an entire episode dedicated to various taxes.
That's a great idea. In one of the episodes, we'll try to list all the type of taxes and why they are applicable and when they are applicable.
That will be very
wonderful.
helpful. That would be very helpful coming from you. It will have a lot of details and our viewers will appreciate that. All right, now let's go into details. When are these taxes due for the what entities?
Absolutely. So each of these tax type has their different filing deadlines. Say for example, sales tax. Sales tax is due in the state of New Jersey on 20th of the next month if you are collecting more than $500 in sales tax. If you are collecting less than $500 per month in sales tax, you can choose to pay sales tax every quarter. You must pay every quarter or monthly. Payroll tax has different filing obligations, different filing guidelines depending on how much the total payroll tax amount. The payroll tax payment frequency could be within a week of running the payroll to 3 months of running the payroll. So every single type of tax that you have has different filing obligation depending on the amount of tax you have. Then there is self-employment taxes. That's applicable to everybody. Doesn't matter what type of structure you have. If you have a self-employed situation, if you are working for yourself, you are earning for yourself, you have obligation to pay self-employment taxes, which is quarterly. Is paid in 4 different payments to the IRS, to the state, and is typically due on April 15th, June 15th, September 15th, and January 15th. Under the pandemic situation, Sanjeevji, the April 15th and June 15th filing deadlines were pushed to July 15th.
Absolutely.
Now, I'm assuming since we are after July 15th, all the small business owners have paid their first quarter and second quarter's estimated taxes to the state and the IRS. If you have not, then typically the state, the IRS will try to charge you a penalty. So the trick here is, if you want to avoid the penalty and you are late in filing your first quarter and second quarter, try to prepay the third quarter. So the penalty, the interest will offset by prepaying the third quarter in advance. So you need to pay these quarterly estimated taxes if you are working for yourself.
Okay, very interesting. Now, with that note, let's just take a short break because we got very interesting information coming our way in the next segment, which is about the entrepreneurs who are based outside USA. Foreign corporations.
Absolutely.
What kind of corporation, what kind of company, or what kind of entity rather they should set up, what are their tax liabilities, and it also depends upon the business that they are in. So we're going to highlight that part. That's going to be very, very important for all of us to know from you. Once again, viewers, any question you have, do contact us. Texttime@tvasiausa.com. We'll be right back after these messages.